You have to get that right. So if you're going that route, you're going to want to make sure you're working with an accountant who knows what they're doing, who's setting things up right, and really has your best interest in mind. Hey everyone, welcome to REI Tax University, where we talk all things tax planning opportunities for real estate investors and professionals. And our goal here is to help you utilize your real estate business activities and investments to offset your taxes and keep more of your own money. Appreciate everyone being here. Now, hiring your kids is a super impactful tax strategy that many business owners and real estate investors have used successfully for years. And today we want to talk about how to avoid pitfalls when you're making those hires. So the first pitfall here is ensuring that you're not using an S Corp or a C Corp to hire the child through if possible. When you hire the child through a C Corp or an S Corporation, you as the employer are going to be subject to Social Security and Medicare taxes, and them as the child are going to be subject to Social Security and Medicare taxes. So if you pay them $10,000, you've likely incurred a 15.3% tax hit on those wages because you've done it through a C Corp or an S Corp. So the way to do this is to hire them through something like an LLC disregarded entity or a partnership or an LLC partnership, like one of these other structures. And the good news here is that if you have real estate investments such as rentals, long-term, short-terms, like you should already be thinking about or having that set up as a non-S Corp, non-C Corp. So hopefully you already have one of these structures in place that you can hire them through. The other opportunity here is to use something like a family management type company. Now, you've got to be aware when you do it that this business has to have economic substance. The reason for this business can't be to avoid taxes. So if you are in the place where you can use a family management company that's not an S Corp, that's not a C Corp, and you can use that for things like paying the kids, handling your admin tasks, and paying out your bookkeeping and paying out some bills. And there's a reason for that to happen, which oftentimes there can be if you have multiple businesses and you want kind of one central company that manages that and helps them with expenses and admin work, right? Those would be the reasons to go in and set up a family management company, and that family management company can handle the payroll at that point. But again, you have to get that right. So if you're going that route, you're going to want to make sure you're working with an accountant who knows what they're doing, who's setting things up right, and really has your best interest in mind. But otherwise, if you have an LLC disregarded entity already for your real estate, if you have a partnership or something, hire them through there. If you've got your S Corp, try not to hire them through there if you don't have to, because if you do, the flip side is that they are going to be subject to Social Security and Medicare taxes. Probably still aren't going to be subject to income taxes at the federal or state level if their income is low enough. If they go above that $15,000 mark, they'll start to be subject to some income taxes as well. So the next pitfall is we're talking about hiring kids that are under 18 years old. So if they're under 18, that's when everything we just said about not having Social Security or Medicare taxes becomes super important, because you could pay them and they are not subject to those taxes, right? As long as it's a not S Corp and a non-C Corp. So pay the kid out. They're under 18. You don't need to worry about these taxes. You don't need to worry about really even doing quarterly payroll returns or anything of that nature. You just need to send them a W-2 at the end of the year. Now, if you have other employees on staff, you're going to want to make sure that they're doing payroll returns quarterly and that you're doing what you need to do for them. But I'm talking about if you're just hiring your kids here. Now, keep in mind that if you do this through an S Corp or a C Corp, it has to be set up as payroll. You have to run those quarterly and annual tax returns. You need to get their W-2. You need to pay in Social Security and Medicare taxes. But now what happens when the kid becomes 18 and over 18? You want to hire your college age kids. You want to hire your adult kids, right? So it works a little differently. You're still paying them out, but they are going to be subject to either Social Security and Medicare taxes. If you're paying them wages as the employer, you're going to be subject to those taxes. Or if you're paying them out as a subcontractor or outside labor, they're going to be subject to self-employment taxes, right? So that is one of the pitfalls once they turn 18, right? Now, you're still might be at a better income tax point, right? If you're at a 20-30% income tax rate and they're at a 10 to 15%, it's still lowering the overall hit on taxes if you're paying them for actual work that they're doing. They just need to be aware that there is going to be a self-employment tax or a Social Security Medicare tax hit on that because they're now 18 years old plus. So still, it's a great move to hire them. They could do all kinds of things. You can probably pay them more than you could pay them when they were younger. Board members is great. If they're living in a property, if they're in a town, or if they're close by your other properties and they can be property managers, they can probably do a lot more with content creation, social media, and just a lot more that they can do. So I still recommend using them and hiring them and paying them effectively. It just works a little bit differently, and you need to be aware of that than when you hire them under 18 years old. yeah, still use Roth IRAs for them, still do everything that you can do smart to get them set up for life. And again, we're talking about shifting expenses, shifting income, and all these things that you can do by hiring them. Now, the last point I want to talk about here is hiring grandkids. And so you cannot directly hire your grandkids and then utilize the benefits of hiring your kids. So if you hire your grandkids, regardless, they're going to be subject to Social Security and Medicare taxes or self-employment taxes. Now, the workaround here would be that instead of hiring the grandkids, you're going to pay out the parent as a subcontractor outside labor. So the parent has activities that they're doing and they're assisting with, they're managing the kids. So you're going to pay them and you're going to 1099 them for the $10,000 or however much it is. And then that parent is going to pay out the child. So again, you're paying them. They would have self-employment taxes, but if all the money or most of the money is going to the child, then that's going to be a deduction for the parent, and the child is going to be at a point where they don't have to pick up income taxes. And because that parent hired them effectively and did it effectively, there's no Social Security or Medicare tax hit, there's no self-employment tax hit. So there's just kind of a different way that you have to set that up and structure it. There's a possibility to do it, but you can't hire that grandchild through your own direct business and get out of Social Security and Medicare taxes or self-employment taxes. You may still want to do it and hire them and let them work for financial literacy, for business growth, and for helping educate them. You could still do that. Just know that you're going to be subject to that 15.3% tax at some level. Thanks for following along with this short video, guys, and hope you've gained some knowledge and some tidbits and things to do to avoid those potential pitfalls when you're hiring your kids, understanding the differences between hiring the under 18-year-old kids and the 18-plus-year-old kids, and just knowing overall more about how to hire them effectively and to use it strategically so that you can get the full tax benefits of doing so. Guys, if you enjoyed this content, if you're looking for more things like this, jump over to reitaxu.com. That's REI Tax University, where we talk all things tax planning for real estate investors and professionals and those wanting to become a real estate investor in order to utilize the real estate to truly offset taxes and get the full ROI of real estate. I'd love to see you over there, guys, and check out more content.